out there, Peter Lynch's One Up on Wall Street. We're going to break down his legendary and surprisingly simple strategy for how you, an everyday person, can actually beat the pros at their own game.
Lynch starts with a real bombshell. His first piece of advice is literally, stop listening to professionals. That's a pretty radical idea, right? It turns pretty much all conventional financial advice on its head, and it's the key to an advantage that you probably don't even realize you have.
And that advantage? Well, it all starts with tearing down a myth. We've all heard it, right? That investing is this super complex, secret world, and that we should just leave it all to the experts, the so-called smart money. But Lynch just completely flips that idea around. He says that the very thing you think is your weakness, the fact that you're not a Wall Street insider, is actually your single greatest strength. The only way you can be dumb money is if you blindly follow what everyone else is doing. Okay, so if you're not listening to the experts, where do you find these great investments? Well, according to Lynch, the answer is everywhere. It's all around you. This is what he calls your everyday edge. It's just the power of what you already know. Just think about the difference here. The professionals, they're stuck in an office, buried under piles of dense reports and complicated financial models. But you're out there, on the front lines. You see which stores at the mall are always packed, or what new gadget everyone at work is suddenly using. You see the restaurant that has a line down the block every single night. That's real, on-the-ground intelligence that the pros just don't have. And Lynch himself puts it perfectly here. This is how you get a head start on Wall Street. You can spot a great company's success story while it's happening, long before it shows up in a report and all the big money has already been made.
So this brings us to the holy grail of Peter Lynch's entire strategy. He's got a special name for these incredible portfolio-changing investments. It's all about stalking the 10-bagger.
So, what on earth is a 10-bagger? Well, it's a term he borrowed from baseball, and it just means an investment that goes up 10 times what you paid for it. We're talking a 1,000% return. And finding just one of these can literally make up for a dozen other so-so picks. Now, if you think that sounds like a total fantasy, take a look at this number. That is the return that Dell Computer gave its early investors back in the 1990s. It was an 889 bagger. You know what that means? A $10,000 investment would have turned into almost $9 million. Wow. And the crazy thing is, a lot of these huge winners weren't some obscure tech companies no one had ever heard of. Look at this list. We're talking about companies like Home Depot, The Gap, Best Buy, businesses that millions of people were seeing and using every single day. The clues were right there, out in the open. And here's why this strategy works so well. The math is completely on your side. Think about it. The absolute most you can lose on any single stock is what you paid for it. That's it, 100%. But the upside? Well, it's basically unlimited. That means just one massive winner can more than wipe out the losses from all of your mistakes. Lynch even said that if you can get just 6 out of 10 stocks right, you're going to do really, really well. Okay, but, and this is a huge but, there is one step that you absolutely cannot under any circumstances skip. This strategy is so much more than just buy stock in stuff you like. You have to do the homework. Seriously, this is the single most misunderstood part of Lynch's entire philosophy. Just because you love a product or a store, that is not a reason to buy the stock. It's the reason to start your research. It's a signal to start digging. It is not the finish line. So, the actual Lynch method is a pretty simple 3-step process. First, you notice a company that seems to be doing something really well. Second, you research it. You look into its finances, its earnings, what the competition is doing, and then, and only then, if the research backs up what you first saw, do you invest. And finally, there's a critical mindset that Lynch talks about. It's what separates real investing from just wishful thinking. It's all about taking the long-term view. He tells this great story about Bethlehem Steel. For years, people bought the stock because it was cheap, and it used to be a great American company, but it just kept getting cheaper. Buying a stock just because it was great in the past? That isn't an investment strategy, that's just wishing. A good investment needs a story about the future, not just the past. And a huge part of having that long-term view is learning to ignore all the day-to-day noise. Look at this chart. If you had missed just the 30 best days in the market over a 5-year period, you would have cut your returns by more than half. That's insane. Trying to jump in and out of the market is a loser's game. Staying invested is how you build real wealth. At the end of the day, it really all comes down to this one simple truth.
A stock isn't just a lottery ticket or a blinking symbol on a screen. You are buying a small piece of a real business. And over the long run, if that business does well and keeps growing, your investment is going to do well too. It's as simple as that.
So that leaves us with one last big question. The next great investment opportunity, the next potential 10-bagger, it probably isn't hiding in some complicated Wall Street report. It might be waiting for you right there, in your office, at the supermarket, or even in your own living room. The only question is, are you paying attention?